Good morning, good morning, good morning. It is the Chart Mentor here on another trading session on Monday, February 27. February 27. It is amazing how time flies. I cannot believe we are already in March. Isn't that something? It feels like we just came out of December 2022 and we are already starting our third month of the year. I just find that to be amazing how time is flying in front of us. But it is Monday and we are excited to be here. It is early 5:15 as usual. Recording a recap that I wanted to do last night, but we end up doing it today. And so I'm gonna do it today for you guys really quick. I'm gonna do a recap from last week. We are also going to talk about the news for today's session. And this video is going to be a complete session of my trading following the recap. So stay tuned all the way to the end. I'm gonna have a recap from last week. Then I'm going to talk to you about potential levels as we are finishing or wrapping up the month of February. When you are in trading, it's important to know what the price is about to show at the closing of any given period. If you are at the end of the month, you want to know what the monthly charts says and how the new month will look like to start. And even though we still have 2 full days of price action and anything can happen, we're still going to set some levels and get an idea where the market could potentially make any turns. But we're also going to speak about news for this week, and then I will look for some scalpings and hopefully I can get them done as usual before 7. I love to finish before 7. That way I can go on with my other things, works, businesses, family. And let's take a look. Let's see what we got. Okay, so starting with last week performance. We had an outstanding performance. I have to say, I am very happy. Well, let me start first by showing I did took some trades on Friday and did not show them. Not that I did not show them, I did not record them. And but I did end up taking some trades, as you can see there. That was on, if you look on the profit trades at the bottom, you'll have the date and you'll have the time at 6 in the morning on the 23rd. Was that for Friday? No, that was Thursday. So why do I have that here for Thursday? Well, where is my Friday? Okay, you know what? The Friday, I know it was like $190, $180. Anyways, this is for Thursday. Let me move on, get this one out of the way. But as you can see, that day I took 2 trades with 0 losses. Let me just go straight to the point because we don't have too much time and I don't want to make this video too long. I still want to trade in this video, so let me get rid of this one. Okay, so this is the one I was looking for. Okay. This is the one for Friday at the end of the week, okay? And as you can see there, we had a fantastic week. Total profits for the week was $4,375. $4,375. If you go down to the dates, that started on Monday, February 20, and at 9:50, and that was 9:50 a.m. And then I finished on Friday the 21st at 7:19 a.m. That was my last trade. Now, the most important thing I want to highlight again, so you can see the consistency in our trading system, is that out of 40 trades, go to the first column on all trades generated was 46 trades or 150 contracts. That's for the whole week, 46 trades. And we only took expenses to be at 6 losing trades or 6 negative trades, okay? So we end up keeping 40 positive trades with a total PNL on the first column at the bottom. You can see we have 2541. So $2,541 for the week. Now, what I want to highlight for those of you curious that is this possible, well, the consistency, you can see there that week after week we keep performing at a level of very small drawbacks. And as you can see on losing trades, let's talk about it a little bit. Out of the 4,375, I had 1,490 in losing trades or negative trades, expenses, right? So our philosophy is that those are expenses. To generate the $4,375 in that week, it cost me about $1,400 in expenses, not counting those commissions that were $343.50. But on the losing trades, you can see that the max drawdown, meaning that the most amount of heat I took while I was on the trade from my losing trades was $557.48. My largest loss was $440, and the average losing was $248. On the flip side, if we go to the profitable trades, you can see the largest winning trade was $540, and the average trade, as you have seen me doing this, average winning trade was 109. So out of the 6 trades, the average losing was 248. So it is higher than the average winning. But if you have a ratio of, what is this, 10 times the number of losers, you have them in winners, then you'll have the results that you're watching on the screen. Now, all of that happened, my max run up, as you can see, the max drawdown was 557. My max run up was 2,670. 670. So that week, I was able to catch some nice runs, which it triggered my total profit to be at the 4,375. Then you'll take those losses, and at the end of the day, last week performed my target, which is 2,500. Between 2,000 to 2,500 for the week is where I am comfortable, so I can create or supplement my income from this. And one thing I want to highlight for the curious one, those who are considering to trade as a way to supplement your income or to potentially replace your income, most of my trades happen, as you'll see in a few minutes, they happen really early, and have you seen already before 7, before 8. But if you see where it says all trades, and you go down by the number of contracts, 150 contracts, average trade 16 minutes, the longest trade time, now this is for the whole week, it's compiling all the time I had an open trade, and it gives me a 7 hours and 46 minutes and 54 cents. Now, I don't know what kind of business. Well, there are businesses, so I would not say I don't know. There are e-commerce businesses you can do the same or more, but it takes a lot of effort to build. And but this is a business that gives you the opportunity to generate just about 2,500 in my case. That's how much I generate. You can make more, you can make less. But I generated last week in about 7 hours, $2,541. I think that's an amazing return on my time. Let me see, I'm just curious. So 25, it's not that it really matters, because in trading we don't really look, or I don't really compare my results for my time, although it is good to keep in mind. So if I have $2,500, right, and what divided at 746, it's $340 an hour. 340. So is it worth it to wake up at 5, 6 in the morning and do an average of $340 an hour sitting in your home office or wherever you are? If you're in a hotel, if you're vacationing, if you can do this anywhere where there is an internet and a computer. So I just want to share my winnings and my losses for last week, so you can see the consistency of the strategy and how we trade the markets, that it does work. So moving forward with the recap, actually that's it for the recap. That's what happened last week. Let me move forward into this week's potential trades, and let's see something here. All right, let me get this out of the way. Let me take a quick look at what the market is currently doing. Do I have a trade? Maybe, maybe not. No, not yet. All right, let me go to last week's. Let's do last week. Let's do last week recap. I'm sorry, guys. I'm telling you, I'm looking at so many things here. I'm not even making sense of what I'm saying. I'm sorry. It's not what I meant. So I need to go here. Okay, this is what I was looking for. I'm going through tabs. I'm going through my OBS studio switches and my images and oh my goodness, and it's 5 in the morning. I am fully awake, actually. I had a good night's sleep, so I wish I can take some trades right away as soon as we finish with the forecast and then go to the gym. That would be awesome. All right, so here we are. This is, let's take a look at our main instrument, which is NASDAQ. And we did this last week. If you remembered, we set up these levels and we talk about it. You can watch that video when we talk about and we set up all these levels you are seeing right now. This is for the weekly chart, by the way. And at the beginning of the week, that's where we start. We want to see how the market performed in relation to previous weeks, and where are the potential levels of interest for the institutions. And so, as you can see here, we highlighted this area and we highlighted this area. These are the distribution area, and then here we have the accumulation area that we are hoping that it will serve as a strong support. Now, last week we were talking about this on Sunday night and how these candles show a complete resistance, and we talk about the thesis that if price was able for last week to open and stay above this area, then we may have a potential pushback on the week. But that was not the case. Price never went above this area, and did actually. You see here, we talk about staying above the closing of the previous week, the week of this is the week of the this? Okay. This is the week of the 21st. And this is the week of the 13th. And that's for Monday, right? So we talk about staying above the closing of this week, this green candle. And we did open and went up just a bit. We didn't even touch the 420. Perhaps we did by an inch. Yeah, it was 418, 418, and immediately came back down, and then we broke the low, the open of that week. Then we broke the closing of the previous week, and then when you start pushing down this way, if you do not, if this bar, and I'm trying to explain to you the way to analyze these things as you do it yourself. If price is coming down and is not able to stop at the low from the previous week or at the lowest of even the week before, then you know this thing is going to continue, which it did. That's why we spoke about this potential scenario, and we said the price could potentially come to this red line, which is the level is 11,869, or if it really pushes through, which it could happen this week, then where it's going to get really interesting is in this section, which is we should have a lot of buying activity right in this block. But if the market is panicking, then we can push even through what is this low candle. And this one was from January, Monday 23rd, the week of the 23rd of January. And then ultimately, where we will hope this thing could stop, it's at 11,535. Okay, and this is a point of equilibrium, or it should be a point of equilibrium. Well, let me do something here just to make sure I have it right. You know, and it's always an area, so you cannot just, let me just put it right there. It's always an area, not an exact number, although sometimes it does work with an exact number, but it's the area, and it's actually 533. 533, the most. Now, if it pushes through, then it should bounce on this trend line that we set up here. Remember, this is for the weekly. So this is a trend line that we broke. And typically, the way these markets behave, they break those trend lines, and it does one or two things, okay? Either trap all the buyers, which is very possible. They just trap all these buyers, just like happened here. You know, price went up and buyers thought this thing was going to continue. If they didn't have this trend line here, they would have, you know, could easily be trapped in this area. And then when they start pushing the price and then it breaks right through the levels, that's when they start panicking and selling, and then you trap all these buyers. And if you bought here, this was in August 2022. Let's say you have all the money in the world to hold. You've been in the red ever since. Price have never reached this level again. Ever since August 2022. So right now we are right here at a potential continuation to the downside, because now I'm just gonna do this really quick. Now this week's candle is dealing with what it was a support, now is a resistance. We can just highlight something like this. Okay, this whole area now it should be selling. So everybody who sold here, from here down, from 169 into where we are, we should have lots of selling, because these people are now participating in the market in the hope of a continuation to the downside, at least to this demand zone, which again is between the 600, 11,600 all the way to the 11,875. You can say 75 or 70, 870. Okay, now when they come to these levels of demand, it's not strange that they break the price below again to do the same idea. Okay, remember this was an area of supply at one point for distribution, and when this price went right through, okay, and then there were sellers here, sellers, because the price came here, then there were sellers here, and then when they realized that their selling didn't work, they flipped their positions in looking for a continuation to the upside, only to then get trapped. So the same could happen here. Price breaks right through, and then you have more sellers not realizing that those who are not watching these weekly levels, then they're not realize that they're about to hit a really hard stop somewhere here, and then market reverses and then it goes back up. Now we are in some very strange geopolitical concerns, and everybody knows all you have to do is not even the news, you just go through YouTube and you'll find out that there is so many people, so many, the voices of negativity is mind-blowing, at least in my opinion. Everybody seems to be very, 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 very concerned, freaking out, very alarming. And so anything that could trigger the markets will trigger the markets in a negative way. So for this week's news, well, let me go through Apple first. Let's look at Apple. And we're gonna look at the levels for these main stocks on the weekly. Oh, by the way, let me see, since we're coming to the close of the month, let me show you what we have now. This is February. And we hope for this February, between today and tomorrow, to really push somehow, somewhere around between 333, all the way to the fives, if we want to see this going higher. If we don't, let's say March comes and if in the first couple of days we don't have a strong recovery, then things will be looking interesting, as we may then at that point on the monthly look where the bottom is, or at least what it will be the hitting the low of January, or the open of January. So we have a long way to go. And when we look at those weekly charts, you see how the perspective changes when you do multiple time frame analysis. You have to do that. And so now you get to see how much room there is really for this thing to drop. So this area, it's right in the middle of the monthly from last month. And so hopefully we get to see something happening for the bulls. And I say hopefully because I do want the market as a whole to do well. I want people to do well. If you're not trading futures or options, buying puts or covered calls and stuff like that, if you're not doing those, you're just buying and holding, and you're just an investor, then you will be in pain if you don't close your positions. For us in the futures markets, or if you're doing options, we get to capitalize if the market goes down. So it's not really a concern, although I want the whole economy to do well. And by the way, you can also short stocks, but not everybody does that. Most people don't do them like that. But yeah, so that was for the monthly for NASDAQ. Not looking good, but perhaps looking great. Again, it's not weird. We're going to have a bunch of news starting next week. This week we'll have some news, but next week we have our market mover for the non-farm payroll, and we have some interesting news coming up, not this week, but next week. And they can potentially either, like I said, bring it all the way down here on the monthly or push it up higher. The advantage of having this shooter where it's at, if we manage to close this shooter in green, that would be great. Because then we can potentially open the next month on a gap up, okay, and start going up through all these stop losses that are hitting in here. But nobody knows. Nobody can predict what's going to happen. I'm just speaking about the potential scenarios and what I would love to see. And if I see one of those scenarios, then we have the strategies to work those scenarios. All right, Apple, quickly. Same thing. You see, this is the kind of shooter we want to see on the NASDAQ. This type of hammer, where is located, if price gets to close or open for the next month somewhere here at the 40s or the 50s, that would be good, because then we're going to be revisiting this high, or potentially revisiting this high, which is for Apple right at 157. But on the weekly, looks like we want to come and visit this. Let's see if we get to come to that area. I'm going to highlight it for you guys. But that is the area that would be interesting to potentially see a reversal and become a buying spot. And hopefully, right, we can have something like this coming from here, then coming here. And then we have an end wave, which it would be super nice for the market as a whole. And Apple is probably the main driver of the Nasdaq and the market. So uh, we want to see Apple performing this way. We come here, definitely be interested to buy the 41s. Again, you know they love to push the boundaries because they know people will be buying there. So it could come all the way to the 38, somewhere there. You know, again, it's just an area of interest for buying it. And if we do see that, it will be awesome if we can see something like that. All right, next is Microsoft. And Microsoft, kind of the same scenario we saw on NASDAQ as far as breaking this trend line. And definitely lots of resistance up here. This area is acting very well as a resistance area or an area of distribution. So we failed to break that. Now we do have kind of the same formation all across that we seek to have. And you know, this will be nice to do something like this. Come to here and then go to this place right there. All right, will be great. These are the levels. So if this is a pattern where these weeks the market opens and continue to push lower, then the 240s will be the area of interest. Maybe they push it all the way there, and then we're looking at the 230s. Who knows? But that's why you gotta watch and have a solid strategy to work yourself when it gets to those levels. How you're gonna do those levels is what's going to help you. It's what's going to help you position yourself for a potential winning, but at the same time position yourself to minimize your loss. Okay, you want to minimize your loss. See what's going on. I'm looking at the market right now. It looks like we're having some buying activity that looks interesting or not really. All right, next, just give me a minute. I'm on my other monitor here. I need to turn something on just so that I can be alerted. If there's something interesting here. There's some nice volume. All right, keep on going with Amazon. Weekly, very nice hammer. And then you see that this is what's happening right now. This is what I was trying to explain the difference. Okay, I'm gonna use this one to explain the difference. When you have such a pin bar, this is another word for this. You can call it a pin bar as well. When you have a pin bar coming from such a strong area of distribution here, the 115s, the next candle, it's important where it opens, because as you can see, it opened right below the close, but still didn't manage. It managed to push right through, but it didn't broke this high. So not pushing this high is what not being able, I'm sorry, to break this high, which you can do something like this really quick just to illustrate the area of interest where you want to see a behavior, certain behavior. So when I speak to you guys about breaking those levels, this is why. If the price is not able to break through after having this. This is how the monthly right now is looking for Nasdaq. Remember, we still haven't closed that candle, but it's right now red. And what I was referring is for price to open above the close and then successfully pass through these kind of levels. If it doesn't do it and it goes back inside, then you have higher probabilities to continuation to the downside like it's happening now. So Amazon, as of now, it could be very easily, it could do one or two things, and that's because of where it's at. Okay, let's just put it somewhere there. And same thing, we have about a potential end wave pattern there where you could do something like this. Now it has been, it's very narrow, but now this can also never happen and we come back down to a double bottom here, or triple or fourth bottom. But when you're entering here, that's why you need to have a clear understanding what's happening and what your next step will be if it goes against you. You don't want to follow the advice of the YouTubers that says just hold, buying here, and then you start getting red, and you hold, and then what if this double bottom doesn't hold, and then it just keeps going down. We saw that on the example I showed you on Nasdaq, where people got trapped thinking that it was going up and it never did. And so sometimes if you enter in the wrong spot, you may not come back for years. Look at those who are holding Bitcoin since 50,000, since 40,000. I know people who are still holding Bitcoin and they bought at the 50s. And you know, when was the last time it was 50? You know, so if you're really long term, then maybe, but who wants to tie their money in the red in a market that you never know what's going to happen? Keep it. All right, next we have, we did our analysis here. That was last week, and we did spoke about this right here. Oh, now I remember this one. So this is Google, and we spoke about breaking this level, which it didn't. And then last week was this indecision, and we spoke about potentially reversing here on the point of control, and it didn't. It just went right through. So Google, 88.31. Google doesn't look like there is any reversal coming. We may have this week a little bit of a push, but now what it was here, a point of control. Let's see, now the point of control was brought up to here. This thing, now we're getting outside the value area from this range. These blue lines right here, that's what is called the value area, and that's where the price has been in the last for 70% of the time. And what we can see is that the point of control is going to be right at 93. And so this week coming up, so far looks like there is no market trades yet, and so, or pre-market trades. So let me see here. Okay, I'm sorry. That doesn't look interesting for the long. So we broke this. This is where we were thinking last week to enter, right at 92. So we're at 89. It's really only $2-3 different. You know, let's see the daily. Looks like they're running out of steam here, but you know, that means nothing. They could definitely push this thing lower. So be careful with this Google. If you're gonna buy it, maybe you can buy it at a cheaper price. This is Meta. Meta on the day. Let's just focus on the weekly. The weekly. We talk about how nice that look, and then we were expecting a pullback. And you have such a long run, we expect a pullback. And so that is what's happening right now. And we are potentially looking to buy this thing. You know, this is an area that can even go all the way there. And if we go there, it's the 47th. I like to just put it right there, 49.50. And you should be able to, by the way, if it does works like this on a move like this one, this is gonna be giant for Meta. If they really, it's gonna be so big, I have to shrink my chart. Because then you're looking to get somewhere there. And before the next leg up. But again, it all depends what the markets do this week, because then you can come back down here. Those two are the scenarios. If you break this and you start breaking these levels, it's going to have a domino effect, a ripple effect to push the market really quick, at least until here. Because there are stop losses accumulated everywhere down here, then they're just going to take them down. Okay, but let's just pretend that's what's going to happen for now, and then that we can look at those levels to how they happen. By the way, let me just go really quick. NVDA has a nice engulfing bar, but I can see that this pattern it's already completed. It's already completed. If you look at it, and it's actually a little bit overextended on this run in comparison to this leg up. So just be careful with this one. It's already dealing with all of this resistance here. Just about. So this looks to me to have a better chance to do something like this. Oops. Either stops there or stops here. One of those two. And then this becomes support. But I'm not saying it will do it, but it does have a better chance. 1, 2, 3, 4, 5. Okay. And yeah, that will push this high all the way to this high. So it either stops at that high or it stops at this high. I think at that point typically tend to push a little higher if it does happen, because but hey, remember this is the weekly, so we have too many. This is probably 6 months down the road. All right, so but just to give an idea, if that does happen, that's for NVIDIA. Tesla, really quick, beautiful. What it could have been a nice reversal. It could also be an interesting situation because it's really doing very nice higher lows on the weekly. I'm just gonna highlight those. There's one, and we can do this one, you know, and there's this one, and then there is this one. So the question is, are we gonna have another one of these? Somewhere here? Maybe. Maybe not. The truth of the matter is that based on this structure, the market is really very consistent in a downtrend. And let's see if we can get, again, trend lines, guys. Remember, I always said these are very subjective. Very subjective. So you can draw them and then adjust them. I like to try to touch as many highs and closes as I can when it's a downtrend. So, and that gives me an area. Kind of gives me an area. Okay, so I could actually, sometimes when the week are very consistent in their heights, I like to do something like this too, creating kind of like a vacuum area that needs to be filled in order to consider that really a break. But as you can see on the weekly, this whole area still resistance, and right now we are only hoping this is a very strong support. Now, if the price does come here, then here, you want to see this pullback somewhere right there. That's 165. And then you want to see 165. And then ideally, you want to, at that point, come back and break. But if that doesn't happen, what could happen is that it just never goes back up. And by the way, you know, this may not go straight up like this is a straight up, but it could also be a little bit of a range. And then it creates a double bottom here, which then at that point, potentially, only potentially, can then at that point go up again. And then we'll have confluence at this level of this higher low by touching the trend lines and the level, which will then cause, and you know, you never know, could very easily do something like this, and then you have kind of like a range before you get to see an actual continuation to the upside, or for that matter, a continuation to the downside. These are the scenarios, and again, keep in mind these are weekly. So, you know, if right now we are on the week of February, all the way here, we're looking at 2024. So I'm just highlighting the potential moves. This could be much closer, or it could be as wide as it is and just stay in that range very easily for a year. Again, what's really putting the markets in this situation is the amount of uncertainties in the world that we have. This is Netflix. I really need to wrap this video up. Netflix what can I say? Giant drops, giant drops. Are we having another giant drop here? Why not? You know, you can see the size of these bars. Unbelievable. Netflix at some point got to $700. Oh my goodness, didn't realize it was that high. $700 for Netflix. Now the volume, it's not escalating. It doesn't seem like it's going to do the same, but this can change anytime. But over here you can see consistent large volume bars, the bearish bars, I say. You know, even as I was going up, you'll see the amount of people consistently pushing the price. Now this is an exhaustion, which indicates that this is it. But is this channel will be broken? Because we can see a very clear channel here. Let's see if we can do something like this. Just about. Let's do another one. Just about. Again, subjective, guys. I know you may differ from me, but this works for me to give me an idea. This is a good one, then we should see Netflix stopping around 300 bucks. It's right now 317, so 300 bucks should be a place to potentially buy. It's actually from 300 to what is this? 288, 280s. Because it can break. Look how this one broke a little bit. And again, that's just my imaginary value. I can also put it right here. But that doesn't look right there. That looks very solid. Because you touch this low, you cover all these closes and open, then you touch again this low, then you touch and did not hold, then you touch, and right now it's right there. So can it break and then touch and then go back in? They do it all the time. So that's potentially what could happen with Netflix. And then last but not least, our mighty dollar. You know, I don't know if you can see it, but it's a very, very, very obvious, which, you know, it's kind of a little dislocated. And if you want, you can just do this and then treat this as a dislocated shoulder. You know, this is also subjective, guys. So it's just kind of like static coloring on your chart I'm playing. But hey, it is what it is, right? And so this is actually kind of good news. If it does work as a head and shoulders, then the price should come back down. On the flip side, if we bring the dollar down this low, that will be good news for the equities. Okay, and we are dealing with this strong resistance right here in the head and shoulder pattern. According to that pattern, which it only plays a 2% role in my trading strategy. 2%. It only just gives me an idea, but I'm not trading based on this. It just gives me an idea. And because we like colors, let's put that in red. And that's something that could potentially happen, and it would be really nice. Let's say you can debate whether the head is there, it is here. You can debate with that, you know. So it's very subjective, but nevertheless, the shape is there, and nobody can dispute that. There is that pattern or that formation, whatever you want to call it, that gives you that idea. Or even if you go up to the same level of this left shoulder, you know, you still have a head and shoulder in play, you know. And so how does this thing gonna end? Right now for the week we are going lower, and we can potentially come lower all the way to 104. But if we visit the low of the previous week, then the equities might close really not as bad as we thought. But that's what we're watching. Definitely a level of interest for the US dollar. And with that said, let's go back, guys. Where is my... Okay. Close that. And let me go lastly to the news for today. We have that here. And these are the news actually for the week. And you can see that this week we have nothing. Monday is cleared. We have Tuesday, tomorrow at 10 a.m. we have consumer confidence. It's highlighted in red, so expect some volatility there. Wednesday, March the 1st, the IMS manufacturing PMI. And Thursday we have, and look how these guys put that. Why would they put a guy from the FOMC member to speak right at the market closed? You know why they do that? Because they want to freak people out. And so the market is closed, and then he's going to begin to speak. Then the next day, coming up Friday, with another red news at 10 a.m., you're going to have a giant, or you could potentially, let me say that. I don't like to take a definitive position because you never know, but you can potentially have a gap up or down that is significant because you don't know what he's going to say, and the markets are going to be closed. At least, you know, you can still take positions and close your positions post-market, after the market is closed, but it's not the same. And so, because not everybody does it. But that's it for this week. By the way, the IMS services, and because you might be asking why there's a difference, you know, why do we have the IMS services? And that's really the supply chain report. There's a bunch of guys, about 300 of them, that they get together and they give they fill up a survey, giving their insight, you know, in the supply chain for manufacturing and then for services. So that's why there is two of them, one on Wednesday, one on Friday. And the 300 participants will fill up the survey that will indicate whether or not these markets are doing well or what kind of activity is happening. They will do that. And so they will answer those questions in that survey. I'm sorry, I'm trying to switch again. There you go. And when they do that, the market will react. So we really don't care from the trading perspective. We're just going to follow the volume and then take those trades. All right, guys. Well, it is 6:13. And what I'm going to do is I'm going to stop the recording now, because I was going to take trades on this recording, but I'm going to leave it on a separate trade. I'm going to stop this recording now. I want to thank you for this PNL recap and this week forecast. I'll see you next week. That way I can keep the two videos separate, and then I'm going to record if I see that I do have an entry. Otherwise, I'll just go to the gym and then come back later and figure out what I'm going to do. But, you know, for now, all I have to say is I'm really appreciative. Please subscribe. Please comment, and I want to start interacting with you guys. So make your comments, ask me questions. I would love to get back to you. And just let me know your thoughts. Let me know what are you thinking, and how I can help you with your trading. So make comment, subscribe, like, share with your friends. Really want to make an authentic. Not that there are no other YouTuber out there that is authentic. There are, but I'm an everyday guy. I work. I have family. I trade for income, and I just try to do this consistently. And after doing it for so many years, I feel confident in sharing with the world how to do it and potentially help you guys in this time of uncertainties and inflation. I can either help you with supplementing income or potentially help you supplementing income, at least giving you the tools and the knowledge. And then, you will be empowered to do something that can potentially help you. Not only to supplement your income or create a fund or vacation fund, whatever. This is just a great skill to have, and know how to manage your own money, and knowing how to take this managed risk in the market. But thank you again. Thank you so much. I'll see you next week with another recap. We are out. So see you next time.